Good morning, good morning, good morning. This is Greg with Trading the Pips. So today I decided to pull up my Robinhood account and take a look at what was going on in the stock market. As you can tell, we're actually bleeding, right? We're at 2366.76. So $2,300, 66 200 $2,367.76, right? So basically, what's going on? The market has been down. September is one of the market's worst months, leading into October as well, and we may even see some type of drop in December as well. So basically, what we had invested is losing value, and we can quickly see what we look for the year by clicking on the yearly chart. We're down $126.65, or negative 5%, basically, right? So we are leaking right now in terms of what we have invested in and the value of those different companies, or not mutual funds, or ETFs or whatever, right? So first up is USO. USO, we bought 5 shares. Current price is 28.27. We can quickly just click on total gain and loss to see what's going on inside our portfolio, right? So we're positive 29.25 for USO. BP, we're negative 124.34 on 20 shares. Azul, we're positive 161 on 20 shares. Bed Bath & Beyond, BBBY, we're 94.30 positive on 10 shares. Carnival Cruise Line, we're positive $5.45 on 1 share. Goldman Sachs GMC, we're positive $6.82 on 17 shares. Sin, we're negative $96 on 25 shares. Ford, we're positive $6.61 on 1 share. PBF, we're negative $3.60 on 30 shares. GR, we're negative $44.24 on 54 shares. PSEC, we're negative $1.34 on 20 shares. AHT, we're negative 179.97 on 106 shares. Vion, we're negative $46.49 on 120 shares. TBLT, we're negative 31.44 on 150 shares. WPG, negative $4.49 on 100 shares. So, ones that I really want to touch base on, because you can tell we're bleeding right now. The ones that I really want to touch base on to show you exactly what's going on is our REITs, right? Anything that's touching the real estate area right now is really bleeding. So the first one I'll hop on is the last one you see, which is WPG. We'll click on it. Right now, WPG is, or Washington Prime Group, is 57 cents basically, right? So 57.51 cents. I bought in at 62 cents. I do have 100 shares. I'm negative 7.24%, or $4.49, right? So am I 100% worried about WPG right now? The answer is no. I need to actually go up onto their website to take a look at what's going on. The price has been down most of the year since COVID. We can click on a yearly chart and you can tell up here we're in the $4 range, and COVID happened right around this area, and then we just saw it drop, right? So going over here to the 52-week low and high, 55 cents, right? Basically, we're at 57 cents. We're almost close to that 52-week low. So what we're going to do is pay attention, and we're going to go ahead and reinvest with maybe not 100 shares, but 200 shares at that price. And we're going to see what we can come out with. So we may end up pushing ourselves in the 50-cent range, somewhere in the 50-cent range. I hope it actually goes in 40 cents, because it'll push us lower in the range, and we'll actually come out with a little bit more shares, right? Well, 200 more shares. So when we see it go up, we're going to make a little bit more profit. So what do I think about WPG? Right now, the housing market is facing a lot of difficulties. They don't own residential properties. They own storefront properties. So a lot of these people are defaulting on their rent, because, people are not really shopping as they usually used to do, right? So Washington Prime Group is struggling, but they're going to hold on to their properties, and I believe that with time they're going to actually pop back, and we're going to see this stock price jump back up. And as you can tell, right, we're in at 62 cents. So once we hit a dollar, 24 cents, we're gonna double our money. This thing used to be, going back a year, this thing, that's 2019, But this thing, even in 2020, it was in the $3 range. So we have the possibility of tripling or quadrupling our money, and making a few bucks from this. So we're gonna definitely hang into Washington Prime Group and just wait, right? They do pay a dividend yield, but they suspended the dividend. As you can see, if you buy right now, you have a 148.30, 305% dividend, right? That's a huge ass dividend versus what the actual price is. Now, the thing about WPG, if they can't get their price back over $1, they're probably gonna do a reverse split. So whatever shares you have, they're gonna cut that down. So if they did a 1 for 10 or something like that because they're trying to bump their prices back up, then it's a possibility that they may bump their prices up to, let's say if it was right now, they'll bump their prices up to $5.75. And then if you own 100 shares, you would own 50 shares. So you have to really pay attention sometime and look around. So this is why I'm going to continue to increase my prices and my terms of my position and my shares, because if they do at some point do a reverse split, I don't want to lose all my shares. I don't want to go from 100 to 50. So if I buy 200, I'm going to go 200 to 100. So I'll still have 100 shares at the new value, right? Gonna go up now. Skip past TBLT, skip past VN, go to AHT. Click on AHT, and what you see here is AHT is $1.43. We own 106 shares. Our average cost is $3.13. We're negative total $179 or negative 54%. Most people would say, oh my God, that's horrible. Now, what you need to understand about AHT is that it's a hospitality company, right? They own multiple hotels all over the place, including in Atlanta. They own 2W hotels. They own the Ritz-Carlton. They own some upscale stuff, not just in Atlanta. Most of their portfolio is full with upscale hotels. This is what you have to know about the hotel industry. COVID happened between February and March timeframe. People started panicking. Nobody's going out to the hotels and doing a lot of visiting right now. So they closed down hotels. They actually own the hotels, so they closed some down. They closed floors down on some. Because they're not really occupying the hotels the way they used to, right? So they're losing money, and they have debts and obligations they have to pay, and they're starting to default on those obligations. So most people say, oh my God, they're losing money, they're defaulting, and they believe that the stock is going to go down. This company is going to stay in business. They own so many hotels. Even if they decided to sell a few to kind of make up for their debt, they'll be okay. It's one of those things that you're going to have to hold for a period of time. I still believe in AHT, even though it's $1.43. My average cost right now is $3.13, and I believe that they're going to rise to the occasion. We just have to hold on and wait. Let's scroll down. You see that their 52-week high is $34.80. 52-week low is $1.35. Their dividend yield right now is 81.081%. So you have a pretty high dividend yield at this present moment. Really, you just have to wait. You have to wait it out. And not only do you have a dividend yield, you also see that the 52-week high is $34. So even if it doesn't hit the high, we can guess and say, hey man, we may go back up in the 30 range, close to that 30 range, and then we sell off. So, that's how I look at everything right now. I look at it in that, the way that is to say, oh, I can sell off 30 shares at 106 shares at $30 each share, and I can come out with some money, right? So there's some money to be made, and at some point they're going to pay their dividend back, right? Especially when they start making money. We'll get out of there and we'll push up. Prospect Capital is not a real estate company, but I'll touch base on it right now just because I want people to understand what they are. So Prospect Capital they're like an investment type company, right? So the reason why I bought this is because a friend of mine actually owned a few shares. He was saying, hey Greg, this is a monthly dividend stock. And I had been talking to him about me buying monthly dividend paying stocks, and I want to add these to my portfolio. So he told me about it. I did a little bit of research, and we can scroll down. You can see 52-week high is $6.75. Low is $3.68, right? They have a dividend yield of 14.48% at this present moment. And basically they pay 6 cents per share. So I usually I usually put everything up against my BP shares because BP is a known company. They're gonna pay their dividends, even though they cut it in half recently. They're still gonna pay the dividend, right? So what I saw was I can buy 20 shares and spend basically $100. I could get in a 1 month time frame off those 20 shares $1.20. Most people say, "Oh, $1.20 ain't nothing," and they're right. It's not. But when you times it by 3, you come out with $3.60, right? So I then compare that to BP shares. And what I come to find out is you can buy, let's say BP was $20 a share still. You could buy 5 shares of BP, and you can buy 5 shares of BP, and the shares are now 31 cents per share, which means 2 shares will get you 62 cents. 4 shares will get you $1.24, and then the 5th share will be added on to at 31 cents and puts you at $1.53. So in 3 months time frame on shares that are $20 from BP, I'm only going to come out with $1.53. But in a 3 month time frame, this company is going to pay me $3.60. So I'm coming out way ahead spending my money in Prospect. Now, the trick is between Prospect and BP is if you are buying BP shares at $20 or less or whatever, or even if you bought it at 25, you have the chance to just hold on to BP shares and wait for them to go back up to $30, $40, which is, $45 like 52-week high. So you're gonna make some money if you buy BP at 20 and just hold. You're gonna make the money off of just selling the shares. You're gonna come out $10 ahead versus taking those dividends. So overall, in the long run, BP may be a little bit more valuable in terms of what you may pull, but Prospect Capital, in terms of dividends, you're going to get way more dividends. So, and somebody that is not necessarily caring about the money that they invested, in terms of because some people want to make money off their money, right? So the old thing was, we put X amount of money inside our checking account or savings account. We're going to get a certain percentage. People just say, people that didn't know about money used to always say, I put $1 million in, I'm going to get 10%, and I get that's $100,000 a year. We better live off of. The bank is not going to give you 10% anymore. They haven't given anybody 10% in a long time. So what they have to do now is find things they can put their money into and would pay them a substantial amount of money. So when you have tons of money, you have to find things to put your money in so that you can get a suitable amount of money from it, right? So we'll get off Prospect. I just wanted to show you that one real quick. We'll push forward and we'll hit send. I want to say this is a gas one, right? So not a REIT. And I know I want to talk about the REITs, but I want to stop at this one as well. We're bleeding on this one as well, right? So negative 34%. Most people want to jump out. Average cost is $11.26. Most people will say, why haven't I either reinvested just yet or just dropped out or put some type of stop in, right? So it dropped, and it dropped pretty fast. We can look at it 3 month time frame when they did their split, and you can see where it dropped, right? Yep. So even in a year time, you see that's a nice little drop. Now let's look at the 52-week high, $71.80. The low is $5.50. So even when we continue to drop, let's say we get back around to that $5 range, we're at $7.42. We're not too far off from it, right? About $2 away from it. I don't want to make any moves until I get close to that $5 range, because if I did get to the $5 range, if I decide to do it right now, my middle ground would put me at an average cost of $9. If I wait till it get to $5 and I decide to make a move, then my middle ground would be right around the $6 range. So it puts me below where it usually hovers when it's low, which is like the $8 range. And even right now it's at $7.42. So I believe that we're going to watch SIN go up as well. It's just going to take a little bit of time. We will go ahead and invest in that so that we can cut that 30-some% down to 15% in the short term, right? Skip past more. And already the last one that I'll click on is BP. I'm negative $125 in BP. There's $17.86. And I know I told people pretty much you look at the market value of those 20 shares right now, it's $357.20. We're down another 125. So if you add 100 to that, that's 457, that 25 to that. So we're already, in the 70 something range, right? So basically 470, 75, $77, something like that, in change that we will have total invested in 20 shares of BP. Right now, a person could buy 10 shares and spend $178. You can buy so right now you can buy your shares and come up with 20 shares of BP and get it for way less than me, right? Would it be beneficial? Long run, it would be. Short term, no. Especially when it comes to dividend yield, right? You can see right there, it says my BP dividend yield that's pending on the 24th. It's $6.20. We click on it, show you exactly what you're getting. 31 cents per share. So when that adds up to $6.20. So I spent basically $400, almost $500 to get $6.20. Yet, if I go back and show you sin, I have 25 shares at an average cost of $11.26. I have $185.50 total value right there, market value. You add the $96, we'll just raise it and say, hey, I'm at $300, right? We'll just say $300. I spent $300 and look at the dividend on sin. $5.63. Click on it. Wait for it to load. We're getting paid 22.5 cents per share. They're paying us less than what BP would pay us. But the reason why we're coming out ahead is because the share price, the share cost is less. So we basically could buy at this present moment, if BP was $20, this was $7.42 or $7 at even, we can say we can come out with 3 shares of this. That's going to pay us. So 3 shares is going to cost us $21 versus BP. 1 share is going to cost us $20. And then we're going to come out with 66 cents in a per share in a 3-month time frame versus BP. We can come out with 31 cents. So we're going to come out with over double the amount messing with sin than we would from BP. So sin is a better look in terms of if I want to get paid dividends. Long term, we go back up to BP. BP would be better because going down to the 52-week high and low, you see BP's high was $40.08. The low is $15.51. They have a dividend yield of 12% right now. We go back up and we say BP is at $17.85. So if it drops down $2 more, it'll be close to that 52-week low. And but we would have tons of space for it to go back up close to that high, $40. Do I think it'll hit that high? I think that it'll go in the 30 range, 30, 32, 35, somewhere around there. If you can catch it in 32, 35 for the sale, you'll probably be smiling. So if you are buying at 15 and you sell at 30, you're going to double your money, right? So that's pretty much the name of the game. That's how I like to play when I'm doing the stocks. I want to double my money in everything that I do. And the things that I buy that I think I'm not going to double my money, like a CEN or maybe not CEN, but Prospect, when I don't think I'm going to double my money that I put in, is because I bought this so that I can get dividends monthly. So, which means I'm going to continue to invest in Prospect so that I continue to get my dividends. So, I know that if I decide to prop another $100 in, I'm going to get another $1.20, right? So I know that means I'm going to be getting $2.40. And you would still look at it and say, oh, that's not a lot of money. So the way I view everything in life now is by expenses. What do you have in your house, what it costs, and what can I put aside in terms of money that could pay my expenses? So if I decide to put $300 inside of Prospect will give me $3.60. Then I look at my Ring doorbell. That costs me $3 a month. I'm now making enough with that $300 to pay Ring doorbell. I have 60 cents left over. Most people will look at it, oh, that's not a big deal, and it's not. But when you're looking at it in terms of expenses, that's one less expense that you have to deal with because you're making money to pay that. And that's how you have to look at it when it comes to your cars. That's how you look at it when it comes to your houses that you want to stay in. If you have a certain amount of money invested in something, whether it be real estate, whether it be the stock market or whatever, you got enough money invested, and the money that's coming off of it in terms of dividends is enough to pay for something that you own in terms of an expense wise, your car or whatever, you now don't have to worry about it. So if you're working a regular job, that money from the regular job is all yours. And you can decide to continue to put that money into something else. I wish more people actually thought like that, but only people that are really thinking about their future is thinking like that. Anyway, I'm not going to continue to hold you guys. Once again, I am negative overall, as you can see, $127.37. There's no sweat off my back at this present moment. I'm going to continue to hold the shares that I have. I'm not going to sell anything other than probably Bed Bath & Beyond because it's set, we'll look at it real quick, $14. And actually, I want to sell between $14 and $15. So I'm going to continue to look at this. I may go ahead and put a sell stop in just to get rid of it and go ahead and collect those funds and move them over to something else I would like, right? So anyway, you guys have a great day. Enjoy yourselves. And if you have any questions, you can always hit me up on bridgesg80@gmail.com, or you can always leave a message in the comment boxes or whatever on YouTube or on my Facebook page or IG page or whatever. You guys have a great one. Bye.